What's going on, everybody, and welcome to a brand new video on this channel. Now, I'm super excited about this video because if you can read from the title, we'll be going over the ultimate blueprint to be able to pass funding companies, right? I want to make a quick disclaimer before we begin into this video. This has been working for me recently and it may not work for you, and any settings that I do mention here can be tweaked and adjusted to your liking. Now let's just jump straight into it. So I'm going to switch on over to my screen here. What I have laid out here is what I like to call the ultimate funded blueprint, guide, or whatever you want to name it. We're going to be going down the list here. So the first two things we have to be, wary about is mastering our strategy and mastering our psychology. We need to know the ins and outs of our strategy to be able to know whether this is an A+ setup or if this is going to be a really bad setup, right? We need to distinguish between the two. We also want to be mastering our psychology because we're going to be utilizing a risk management strategy like no other, and we need to be strong for it, right? We can't be making decisions on the fly. We cannot be revenge trading or over trading. It won't work. If we revenge trade and over trade, it won't work. Once you have these two down, we can go down to choosing our path. Now there's only one option, and I call it the fast path. Right? So the fast path, what it entails is we're going to be compounding our earnings and purchasing accounts to reach our ultimate goal of 100K. So we're going to move over here. Basically what I mean by compounding is we're going to buy the lowest, the lowest challenge we can. I recommend 10K, starting off with 10K. Why 10K? Because it's cheap. And it won't hurt us really badly. I know we've all been there. We purchase like a 50K or 100K account. We put in a lot of time and effort to be able to pass it, and within a couple of weeks or so we completely blow it, and then we're just like devastated. We're feeling really bad and whatnot. But with this strategy that I'm going to tell you guys about, it eliminates or reduces that load on you, because you're purchasing these accounts to pass them quick, to compound them, to reach the ultimate goal of this 100K. That's our ultimate goal, is to reach 100K funding, 100K in a funded account as quick as possible. So instead of just buying 100K and using static risk management, we're going to be using set risk management, a high set risk management. So let's begin. So what we have is the 10K. We want to purchase a 10K account. Let me just bring up my draw tools here. We want to be able to purchase a 10K account because it won't hurt us if we lose it. And what we want to do is risk 3% per trade idea. So why 3%? 3%. I like 3% because with most challenges they have an overall drawdown of 10%, and they give us 3 chances to be able to pass it. If we lose 3 in a row, we only have 1% before we go bust, and we just do whatever it is. That count is gone. But if we're down 2%, risking 3%, so 6%, and we make our take profit, we might hit break even or go back up in profits. So that's why I like 3%. And 3%, not only that, it applies to the risk to reward that we're going to be utilizing. So what we need to aim for is a 1.27 risk to reward. We can't go anything lower and we can't go anything more, because 2.7 is equivalent to 8.1 in terms of risking 3%. So whenever you risk 3%, 3 times 2.7 is equal to 8.1. If you pull out your calculator and do that, that's what the calculations will come out to. And 8% is what we need to be able to pass the challenge. It's not really 2.7. We can go for like a 2.67 or 6.5 or something like that. This is just much easier to understand because most challenges have a phase 1 profit target of 8%. So this will get us to that 8% mark. Now this 4% can be increased to, this 3% can be increased to 4%, but that will just, give you only 2 chances to be able to pass the challenge. But the good thing about it is that you can go for a 1 to 2 risk to reward ratio, right? Instead of a 1 to 2.7. That's the only benefit to it, but I recommend doing 3%. So this is basically the risk management strategy that this video is all about. It's just basically increasing your risk and having a static risk of 3% instead of 1%. That's what this entire video is about, and this is the risk strategy that I've been using to be able to pass funded challenges. As you know, I passed the 10K, I passed the 25K, and I received payouts from both of them. I also recently passed a 50K futures prop firm account using this risk management. It's just risking 3%. But like I said, this thing can be adjusted. Like some companies might have an 8% rule. Then you can bring it down to 2.5%. Some companies might have a 12% risk, right? Then you can do 4% per trade idea, right? And some companies might have trailing or what. This risk can be adjusted and can be adapted to any of those companies. I'm doing this based off of Funding Pips because they are my favorite funding company, and this is what I came up with. The next goal of our list is once we are able to pass this 10K account and we are funded, we want to aim for, like 3% on the account. So now we're reducing our risk from 3% to 0.5 to 1% per trade idea, and we're going to try to make 3%. 3% will give us around $300, right? So now with this $300, we're able to, take our initial investment out. So I think it's $66 for a Funding Pips 10K account. So we are removing ourselves from the equation. And also we can now use that money to purchase, say, a 25K account. So not only have we not only have we removed ourselves from the equation, we are now using the funding company's own profits to be able to purchase another account, to be able to apply the same risk management strategy. Now let's just say if you're in a world where everything is going right, you pass the 10K, you pass the 25K. Now you have 35K in funding. Now, if you aim for 3%, that's around $1,050. I've tried to make this video 3 times, so I already know off the top of my head. Now you have $1,050. Now, what you can do with this money is take half of it and purchase 100K and take the other half of it and bank it. So by bank it, I mean you're taking that other half and you're putting it aside to either to help maybe pay with bills or whatnot that you might do, or help purchase maybe another 25K account to have in reserve. So basically this 35K account is going to be set in reserve. This is going to be the one where you're risking less and you're just trying to make money to help you fund your bigger account sizes. Now, in this perfect world that we are, we've banked this half and we purchased another 100K. And now with this 100K, you can apply the same risk management style, knowing that you have a reserve fund to be able to make money off of, to be able to purchase another one. So now there's less stress off of trying to pass this 100K account, if you understand what I'm saying. So if you were to buy this standalone $500 of your own money and you put time and effort and you fail it, you're gonna feel really bad. But then if you have $35,000 in reserve funded waiting for a withdrawal, you can use the money to be able to purchase this account, taking yourself out of the equation and removing that sort of load on yourself to pass it, because if you fail this 100K, well, you have bank money to purchase another one. But not only that, you have 35K in funding to be able to help purchase another 100K account. And that's the whole funded blueprint strategy. It's pretty simple, and I'm gonna summarize it for you guys because it might, seem complicated. But basically what we need to do is master our strategy, master our psychology, then we move on to purchasing a cheap account, whatever we can afford to lose, knowing that we are gonna lose, because this won't work right away, right? It might take you some time to adapt to it or get used to it or to understand the strategy, right? So we purchase that account. Once we pass it, we move on to the next account, which is the 25K account. Once we pass that, right, then we can take the profits and purchase a 100K account. Now, let's just say you get a little bit, more risky on that 10K and you risk 2% per trade idea. If you can purchase a 50K account using the profits earned from the 10K account, you can skip the 25K account. If you made like $700, $800 on that 10K, you can take the profits and purchase a 50K account, because you would have now $60,000 in reserve just in case if anything goes wrong. Just in case if you fail that 100K account, you're risking less on this funded account to be able to help fund your 100K account. So this is basically the entire blueprint, or this, the strategy, the blueprint plus the risk management strategy here that, we are utilizing. So if I bring this up, we'll call it risk and strat, right? This is the entire, process here. So we're utilizing the compounding strategy. We're utilizing a static high risk strategy to be able to aim for our goal of $100,000. And if you guys enjoyed the video, make sure to hit that like button and subscribe down below. I'm going to try to create a lot more value content for you guys. If you find this, helpful, like I said, leave a comment and hit the like button. I'll see you guys all next time. Take care.